Since its initial public offering, Tesla, an automotive manufacturer, has gained attention at POW. Since the company's founding, its shares have increased significantly. Analysts frequently discuss Tesla, one of the most talked about stocks, as it leads the electric vehicle market. Cathie Wood, the CEO of ARK Invest and a longtime supporter of Tesla, is one such analyst. In the next 5 to 10 years, she thinks Tesla and a few other tech businesses will see considerable growth. According to her, Tesla's stock would reach a value of $3,000 by 2025. However, she provides some information today regarding how a stock market meltdown would affect Tesla shares. What should one be aware of during a market collapse? How will Tesla fare in a crash of the market? In today's video, let's find out. XX haven't started 2022 off well so far. Markets have had difficulty getting traction. High inflation and a more stringent monetary policy from the Federal Reserve are worries for investors. On the morning of January 24, Tesla's shares dropped as much as $10 to $858.83, leading the majority of electric vehicle manufacturers' equities to decline as well. Rivian Automotive saw a 52-week low per share of less than $60, and Nikola Corporation saw a 10 decline from its closing price on January 21 to $6.70 before making a comeback. In the midst of a wider market sell-off, Rivian Automotive and other electric car companies have recovered sharp intraday losses after reaching record lows, while the larger markets rebounded. Rivian, Lordstown Motors, Faraday Future, NIO, Cano, Nikola Corp, and Electric Last Mile Solutions saw their losses increase by 10 to 18. Elms, Canoe, Nikola, and Lordstown Motors all closed higher, gaining 1 to 5%. The price of Rivian stock dropped by almost 1. By contrast, Faraday Future curtailed losses to end the day down 4.7, while shares of the Chinese manufacturer NIO saw a 9.1 decline pre. And early revenue electric vehicle businesses, volatility parallel changes in the overall market as investors chose to profit from the prices following a significant sell-off in morning trading. The NASDAQ Composite Index rose during the day after plunging as much as 4.9% earlier, after dropping more than 1,000 points. The Dow Jones average increased by almost 100 points. Less than 2E was also taken out of the shares of more established automakers like Tesla, General Motors, and Ford Motor, one of the most watched EV firms, Rivian, saw its share price drop below $60 for the first time since its hugely successful IPO in November 2021. The stock price of the corporation has decreased by 38 since becoming public. According to Wedbush Securities analyst Dan Ives, a lack of revenues, chip supply crisis, and several production issues have put a shadow over the electric vehicle business. Startups focused on electric vehicles are currently caught in the wrong side of the market storm in this risk-off environment. The analyst went on to say, in an email to CNBC, execution is key to rebuilding credibility on the street one brick at a time. Tesla is currently selling at $8.40, down about 6 in the day's opening price, while Nikola and Rivian are down 7.6 and 0.6%, respectively, as of the time this video was recorded. While Tesla is a seasoned veteran in the electric vehicle industry, other manufacturers have not yet turned to profit and are still making their way through the market. Due to record sales and the Biden administration's determination to give electric vehicles priority as part of its climate change policy, the company's stock price skyrocketed throughout the pandemic. Tesla's shares surged beyond the $1 trillion threshold as a result of investors keen to cash in on the electric vehicle trend. But in 2022, the stock's trajectory changed. Because of this, Tesla stock price has decreased by roughly 24 since the start of the year, which is strange since the business recorded record deliveries and analysts sent positive recommendation letters. The car maker still has to contend with the impending risk of a technological market sell-off, though. For instance, amidst a historic sell-off, the NASDAQ has reached correction zone. Investors are lowering their exposure to risky assets and deleveraging their portfolios as a result. Stocks with anticipated future earnings are included in this list. For long-term investors, the latest decline in the price of Tesla stock may be a familiar story. Tesla's stock has always been somewhat of a wild card, so even with its recent sharp drop in price, it was not totally unexpected. Analysts believe that the car maker will rule the electric vehicle market in the future. For instance, a longtime supporter of Tesla, Morgan Stanley, claimed in a note that Tesla has no direct rivals. As we continue to see Tesla's model rollout unfold, we believe car companies and investors may change their electric vehicle strategies in terms of volume, the company said. Only 11 of the 41 analysts that follow the firm, nevertheless, have a sell recommendation on the shares. The company's fundamentals serve as the foundation for their optimistic argument. Tesla opened plants during the pandemic, came up with solutions for the chip scarcity facing the auto industry, and reported record deliveries when other automakers were finding it difficult to deal with the virus. Expectations for Tesla's success when it releases its earnings on January 26 have increased among analysts. One such instance is Tesla. Despite recent legislative backing, the electric car market has not yet gained enough pace to compete with gasoline-powered automobiles on an equal footing. For instance, in the first half of 2021, electric vehicles made up 7% of the world's car market. So most people believe that Tesla is a high-risk, high-reward stock. It's among the most fascinating companies in the world. The founder of Tesla, Elon Musk, is a contentious star in the IT world. Due to the company's Silicon Valley origins, investor expectations have increased. When Tesla's market capitalization hit $1 trillion in 2021, a valuation previously only attainable by a small number of extremely wealthy individuals, the business garnered even more attention. Although it's hard to say what the future holds for Tesla, it has amazing potential. It is advisable for tele investors to exercise caution and take into account any possible hazards that Tesla might encounter over the next 5 to 10 years. Despite the onerous dangers involved, many people invest in Tesla because of the high stakes, and the firm is making every effort to reduce and manage these risks. Why does it carry risk? First off, prospective owners of the Model S will still have to pay a hefty price tag starting in November 2021 at $94,990, even with the generous tax reductions and other government incentives. As of May 2021, even Tesla's new, less expensive Model 3 will cost $43,990 before tax credits and gas savings, making it still too expensive for most drivers. Not only are the cars pricey for average consumers to purchase, but they are also costly for Tesla to produce. Analyst Gordon Johnson of Vertical Group estimates that the business lost almost $14,000 on every Model 3 vehicle sold in 2018. The lack of batteries to power Tesla's products was one of the company's early problems. However, these numbers might change as the business grows. The business hopes that its Gigafactory in Sparks, Nevada, which is now under development, would provide an answer to its battery problems. It is anticipated that the lithium-ion production facility will help increase the yearly output of more 500,000 Tesla automobiles, and logistical and regulatory obstacles routinely impede large-scale initiatives like the Gigafactory. It's unclear if the factory will be finished on schedule. The Gigafactory has received approval from the Nevada government and is predicted to create an additional $100 billion in economic activity over the next few decades. Musk has alluded to the possibility that one Gigafactory may not be sufficient to meet demand. Despite the building only being 30 completed, several of these facilities can be needed by the business to meet demand. In order to maintain the business fully charged and stockholders satisfied, significant capital expenditures will be required. Another issue is the growing competition for electric vehicles. It wasn't just Tesla that created electric cars. It is interesting to note that Thomas Davenport might have created the first electric car as early as 1834. Despite this, Tesla seems to be the most successful brand so far because of its high retail costs and short driving range. The Nissan Leaf and the Chevrolet Bolt, two well-known rivals, were unable to acquire traction at first. The Nissan Leaf has a starting price of $27,400 before incentives as of October 2021, with a maximum range of 226. As of 2021, the 2020 Chevy Bolt beats the 220-mile range of the base Model 3 from Tesla, with a starting price of $31,000 before incentives and a range of 259 miles. In the upcoming years, Mercedes-Benz, Volkswagen, Subaru, Ford, and BMW are a few of the brands that intend to join the electric vehicle industry. Tesla's market share might start to decline if this happens. Apple thinks it can compete in the transportation sector with Tesla. Google has also made investments in the automotive sector. It makes sense that businesses with greater current customer bases worry Tesla. Hard to argue with Tesla's success as an electric vehicle maker given its trillion-dollar valuation, but there are a lot of other obstacles to overcome, such the challenges of creating technology for affordable electric vehicles and the threats from rival corporations. What effect do you believe a stock market meltdown would have on Tesla? Please leave a comment below.